tonight. Let's get our first look at futures after a pretty big day on Wall Street. Let's take a look. Mixed, modest moves across the board. S&P, NASDAQ in the red. Dow is in the green by a few points. Comes after, I said, a strong rally on Wall Street today. The Dow rising more than 550 points or more than 2%. The broader S&P 500 and NASDAQ were even better than that. NASDAQ was up almost 4%. Amazon hit an all-time high, as did Netflix, excuse me. The Dow was helped by 5% gains in Raytheon, Walgreens, Apple, but oil prices slid 10% as investors were concerned upcoming production cuts would not be enough. Let's bring in now Liz Young, BNY Mellon Investment Management Director of Strategy, and Josh Brown. He is a halftime report trader, the CEO as well of Ritholtz Wealth Management. Good to have you both with us. Liz, this momentum just keeps going. How long can it take us?
Look, Scott, I would look at this and say a market in motion will stay in motion until it gets surprised. And there's been nothing in this data so far that has surprised us. We knew that the earnings data was going to be bad. We knew the unemployment data was going to be bad. But the things that would surprise us on the downside are that this lasts further into the third quarter. I think the market has assumed that the second quarter is a throwaway. If this starts to last into the third quarter, that's a downside surprise, and we could get to the point where we retest new lows or even blow through those lows of March 23rd.
Josh, does this make sense to you, what you've witnessed for the last week or so?
A lot of things don't make sense to me, Judge. I'm definitely struggling. And I would tell you that anyone who says they have more answers than they do questions is either lying or is so stupid that they don't even know what they don't know. So now you just had the best 15-day period for the U.S. stock market going back to 1933, 27% gain in 15 days. The last time that happened, FDR was in the White House and Babe Ruth was on the Yankees. We have not seen a period like this, and there really is no playbook. And I'm going to tell you something that I think a lot of people are potentially getting wrong that could have huge consequences for how you're investing right now, which is we're all talking about the reopening of the economy as though it's a positive catalyst. Judge, what if it's a negative catalyst? Hear me out on this. Try to imagine a scenario where people are faced with the choice of staying home or going to a restaurant and having to lift a mask up to put a fork full of food in their mouth. How many people are going? Imagine the airlines that you and Phil were just talking about. What if they have to fly half the amount of people in each flight? They're going to have to charge twice the amount. How many people are flying unless they absolutely have to? Very few. So what if the governors begin to slowly, quote, reopen the economy, and they announce that state by state, people can start to kind of go back to their activities, and it's a negative catalyst because people realize, oh my God, so much has changed. I don't know when we're going to get the economy of 2019 back. So I do think a vaccine, whenever it happens, will be positive. But listen to what Scott Gottlieb just told you. The worst thing that can happen is we start to roll back some of these stay-at-home orders, and all of a sudden, people get a little too comfortable, and we have a resurgence. What would that do to the stock market? Forget about the public health situation. What would that do to investor sentiment? I think it would crush investor sentiment. So I'm as worried about everything else as I am about the idea of reopening the economy, and people are disappointed at how slowly things start to go back to normal, if at all.
Liz, the last word goes to you.
Yeah, I agree with Josh. I think this has been an overreaction on both sides. When this all started, the market started to price in an L-shaped unrecovery, I'll call it. And now we got fiscal and monetary support. There are really only two reasons that a market's going to rally. Either we get fiscal and monetary support, or the expectations of growth and earnings markedly improve. That hasn't happened. We certainly haven't seen an improvement in growth and earnings expectations for the rest of the year. And now the market is suddenly pricing in what looks more like a V-shaped recovery. It's not like flipping a switch, as Gottlieb said earlier today. It's going to take a long time, and we're probably not completely out of the woods. We're going to have adjusted behavior and adjusted investor behavior until we get a vaccine and we can feel like this is really behind us.
Good having you both with us tonight. Liz Young, Josh Brown. We'll see both of you again soon.